And that took no time. So after installing the new fence and taking the new fence down a good 2 inches below the surface, here we go. So I get to work on that today, which is going to be awesome. Hope you guys are having a good day. Good morning, Lyndon. Good morning, John, Eric in Northport, Mountain Mike, Bleak. What? You did all that this morning? Yes, I did all that this morning. I built it all this morning. All right, so let's dig into our usual little chat about what we are doing today and why you're joining us at 8:45, and invite your friends and mom, watch the show. If you start looking at your portfolio, particularly on a day like today, 9:30, it is going to be too late. The stocks that are worth engaging in trading today, we're going to dig into. There is a lot of headline news today, particularly around the AI space, gold, silver, and of course, the return of geopolitics. Huzzah. We'll talk about where smart money is positioning. And of course, at 9 o'clock, we will give you the runner. Tomorrow, we will have a special guest at 8:50. Dig a little deeper into some of the things happening in the pre-market hours. Very excited about that. Start bringing some new voices onto this show. Get a little bit more perspective. But as we dig into this, well, here's momentum. I did it backwards. Forgive me. But we're still seeing improvement. We're still in that negative figure right now. But again, the FNGD bounced off its 20-day moving average and has reverted back. The key thing to keep an eye on is NVIDIA this morning. NVIDIA pulling back to its 20-day simple moving average, breaking under that and touching its 50-day SMA, cracking under it momentarily yesterday. We're going to continue to keep an eye on NVIDIA as we always do, but just pull up the chart real quick and kind of show you where we sit. Yesterday was a bad day for NVIDIA. It rolled back over right after the eight-day EMA on the 3-minute chart. Top to the 50, top to 20, and rolled right back over at volume weighted average price, hitting that low yesterday. Key thing to keep in mind here with NVIDIA is the fact that it was in very strong running mode for the last 2 weeks, going back to the, where are we here? Back in the 13th of September. Key thing to just watch here is whether or not this holds up. The AI trade's still looking very strong, but when NVIDIA breaks down, obviously the importance of the stock is so critical given the fact that it's a $4.3 trillion company, largest weight of the S&P 500, largest weight of the NASDAQ, 1,200 ETFs, more ETFs coming every single day because, well, we don't make things anymore. So we will dig a little bit deeper. In 1929, people were buying stocks like crazy, and none of them were preparing for Black Tuesday that happened 1 week later. You win a prize. Ugh, this coffee's terrible. All right, momentum remains green. NASDAQ remains green. Russell remains green. And what are we focusing on? Well, again, TSMC, TSM Semiconductor, raising its full-year guidance thanks to strong AI demand. And it only takes one company to lift all of AI up once again, right? And this is where we were. So even though NVIDIA did chop down lower a bit yesterday, you see this move here. It is the 50-day that we're paying very close attention to on the SMA. It cracked under that for a brief period of time yesterday. It has snapped back this morning, 182.50, which it likes to do. We'll be paying a close attention to that 3-minute and 5-minute charts today and watching volume-weighted average price again. But it's not just NVIDIA that's in play. AMD Micron has been a very strong momentum stock the better part of the last 2 weeks. Broadcom, all the big names. Semiconductor leadership is continually reinforcing that AI trade momentum. A solid move on one can and will lift all boats. And we'll be watching guidance from chip makers basically the entire earnings season because expectation is significant amounts of demand, more CapEx spending. Remember, we've talked a little bit about this. The primary driver of all U.S. economic activity right now is CapEx and AI. If we did not have any of that CapEx right now, if you just removed it, I know that this is a static measurement, right? You would argue that money would rotate to different places. But without it, GDP is 0.1%. 0.1%. So once again, this is how critical this period of time is for the AI trade. Going to continue to argue we've got 18 solid months ahead on this as well. One of the other things that I did not cover today in this chat, but I do want to just simply point it out. It does warrant your consideration. It's the idea that the other day, Jerome Powell effectively said that we're going to stop quantitative tightening. It was very quiet the way that it was provided, but basically they indicated that the central bank's QT program would be approaching an end in the coming months. Well, what does that mean? Fed balance sheet, right? The Federal Reserve's balance sheet, which has been falling since 2022 from about 9 trillion, has pulled back to around $6.6 trillion in its credit and liquidity program. Powell spoke at the NABE event, which is the National Association for Business Economics in Philly a couple of days ago, saying that, quote, we may approach that point in the coming months, talking about ending QT, which means it would stop running off its balance sheet. Why are they doing this, and why is this important? Because Powell has specifically talked about the idea of tightening liquidity conditions globally, including, quote, a general firming of repo rates along with noticeable but temporary pressures on selected dates. What this means is that we are seeing some stress in the overnight markets. It is starting to appear. It appeared in 2024. The SOFR, overnight funding rate, has effectively been moving in directions that would indicate potential stress on the horizon. So why does this matter? It matters significantly because, again, the reserves have been tightening up. And why does this matter? The point here is that they have learned their lesson from 2019. The mention by Powell was the kind of money market strain experienced in 2019, September 2019, is important. That was when the repo market suddenly seized up. Overnight rates went to 10%, forcing the Fed to step in with emergency repo operations. It was another reminder of how quickly liquidity can deteriorate when reserves, banking reserves, get too scarce. So I bring this up because it's the end of QT. So while the Fed was tightening, gold prices doubled, went to 2,100 last March to 4,200. It represents a continued shift from this neutral accommodative policy. It also tells me they're probably going to have to engage in QE at some point. And this is a wake-up call because they are choosing between their balance sheet normalization and maintaining financial stability. This is what happened back in 2019. They got too tight. Things went haywire. They had to inject money. And the long-term trend of this is that this goes higher. This goes up. Liquidity sensitive assets, Bitcoin, gold, and silver could see another leg up the moment that they have to start to continue with QE. It will come. It will most definitely come, which is also, I think, in the background helping to lead to the continued rally in gold. Obviously, the headline stuff is around the Fed rate cuts, expectations, and the renewed U.S.-China tensions. But I talked about this yesterday at length from 3 o'clock to 4 o'clock, arguing that we are in the middle of a paradigm shift in the global financial system. The number of central banks that have now surpassed the number of reserves that are in their system in terms of dollars. That chart is very eye-opening. It is a huge shift from the 1990s when we got people addicted to U.S. debt, part of a plan that was to extend the ongoing dollar strength in the global markets. And because the petrodollar was under strain post-Gulf War, the focus was, let's get people into U.S. treasuries. You'll be shocked to know that there were a lot of people who are still in influence in the financial circles were heavily involved in that. But that said, this paradigm shift is leading to just continued gold purchasing by central banks. We're seeing ample speculation, and the ETFs continue to see significant inflows from retail and institutions at the same time. The question really will become whether or not a lot of the financial models that a lot of the institutions utilize will start to incorporate gold, because that was ignored for the better part of 3 decades And now you're seeing this sudden return. So GLD, Newmont Mining, gold, RGLD, the mining ETFs. I continue to just note, if you're looking for an opportunity, if you don't want to chase it, you can always sell spreads to the downside on companies like Newmont. Look down at the $80 level, 80 to 75, 80 to 77.50. If it falls to 80, buy it. All signs point to renewed liquidity expansion, more monetary inflation, higher dollars, higher sensitive, liquidity sensitive things like gold and Bitcoin and silver. This rally can and will continue. It's going to continue. ETF flows continue to accelerate into gold, and there is just still just high momentum that may shift to different forms of asset allocation. And finally, you see in gold, forgive me, there's two more things here. Gold's getting a little bit of a bump today. It's been a little overdue, right? Because gold was, or forgive me, oil had been beaten up. And we saw this on the OILU, which is our kind of gauge in the middle of the energy world, had dropped back under the 20 and the 50 and the 8-day EMA. That's bad news typically for the producers, right? Occidental yesterday, we talked about, got beaten up. Seems like we're finding a little bit of a bottom here for now. We were toward oversold on the OILU, but this is really a geopolitical story. Oil futures are up after India is saying that they're going to stop buying Russia. I would not necessarily completely bet on that, but this is the type of headline that can help find some support and, stop the bleeding in the energy markets as we've moved. Tightened expectations for global supply, more geopolitical risk premium to crude markets. We will see that. And once again, the market reaction hinges on compliance by India and OPEC's response and whether or not OPEC is going to increase their production levels to meet the potential demand of India. Finally, the rare earth stuff is still in play. This has not gone away. MP Materials, Linus, the technology and the tech hardware names, REMX, ETF, USAR, UAMY. Again, China expanding rare earth export controls. That creates supply chain fears. That drives up the cost of everything. It creates renewed challenges and concerns about inflation here, particularly with consumer products that rely on these rare earth materials. They remain critical inputs for semis, for EVs, for defense technologies, for missiles. And the question is, how are these countries, particularly the US and Europe, going to get into the mode to specifically focus on procurement of these materials? Now, Hamburg, which is a major industrial city in Germany, has just voted to get rid of all of their manufacturing. They basically have said, we're going to move toward zero net carbon by 2035. Good luck with that. But that's 5 years ahead of the German goal, 15 years ahead of the EU goal. That's going to rely on a lot of rare earth materials. Where are they going to get them? They just voted for this. 44% of people showed up to vote, which means 23% of their population voted to deindustrialize the heart of German industry. But the thing is, all of that has to, if they're going to move toward these clean techs, they need rare earth materials. Where's that going to come from? So I continue to argue that Greenland remains in play. There are deposits there. PANL, which is Pangaea Logistics, is an interesting long-term play if we are procuring out of that region. They are the the Arctic shipping company that just effectively pulls docks out of the boat and procures out of areas like Greenland. We'll see what happens. There's a possibility, and don't be shocked by it, if we were to declare a national emergency and potentially suspend some laws to expedite mining here in the United States. Mining. Runner time. Where are you, Charlie? There we go. He's here. All right, let's drink this coffee. It gets worse every day. Man, Nespresso, what happened? I know what happened. That happened. They must be pulling this out of some, like, this doesn't taste the same as it did last year. They must have swapped this out and went with something that is just made in a bathtub. Morning, Tim. Good to see you today. So you got gold up, cocoa up, silver back up, 52, platinum, and good old palladium hit 140 PALL, our good bud PALL. Just continuing to move higher. It just keeps going. Long-term target, 200. Right there. Oh, and by the way, if you own a vehicle, make sure you secure your catalyst converter. The more you know. Somebody's going to try to steal that for the metal. First stock of the day is C. I'm going to switch over to our good friends at Think or Swim. Take a quick look here. C. All right. So, Citigroup, where are you, my friend? Want to work today? There we go. Look at that little city. Oh, that's adorable. Look at you. Pull this chart back real quick. Look at the year. So once again, you had all of these banking stocks get absolutely annihilated recently. And this, again, was this, whatever this was, we had that big pullback in the banking sector, particularly in the regionals and in the private equity names. Citi has bounced back, obviously. And what we're specifically looking for is just continued momentum, continued strength on the upside here. We saw a nice move yesterday on our daily chart. What I'm specifically looking for, however, is just a simple, come on, you can do it. One day, one day, one day, everything's just going to work for me. It's all going to work out. It's all just going to work out, I swear. Our daily chart breaking above that. Keep an eye on that 8 and that 25 blue line over the red line. I like Citigroup. I like a lot of these banks right now, and I think that you just want to focus on a high probability trade. I have no problem selling spreads to the downside on companies like Citi right now, particularly if the Fed's going to be ending its QT and we're going to start to see some potential additional support. I'm going to be looking at the 90 and the 80 and the 87.50 out into November. We're out into December and looking to sell spreads. Specifically, let me pull something up real quick. All right. Let me actually find something that's worth a damn. See. It's at $100 today. How about that? Or was it 100? We're at 90. This thing just hit 105. All right. Out into November. Yeah, I mean the 90, you sell the 90 for November 21st and you buy the and you buy the 87.50. So that gives you a 219 to make 31, 14.2% and a 86% probability of profit. Yes, Citi just reported earnings. I'm going back to the abacus. I'm going back to writing by hand. That's what I did for 15 years. The hand works fine. You don't need all the bells and whistles. I'm writing down some stuff in the chat for you real quick. %14.5%. Okay. Moving on. Let's move on. Let's move on. We're going to move on. American Airlines. American Airlines, a lot of these airline stocks, again, same thing, getting beaten up during that kind of negative period. We've seen some strength. We saw Delta have some good numbers, and we have this crossover here that we're looking for. So AAL, pretty simplistic trade when it comes to this. I'm simply buying in the money, and I am selling out of the money. That is a call spread. So what am I specifically looking to do? Well, if we look at the options chain right now for AAL, going out into, let's go a little further down, strikes all. I'm not doing puts. I'm not doing puts. I'm not doing puts. Oh, for God's sake. I'm switching over. Again, you might as well just punch me in the face. I can't work anything at 9 o'clock in the morning. I apologize. 1250 out to the 31st. No, 21st. So 11-cent spreads. I like the idea of buying the 11 in November 21st and selling the 13. And what does that present me with? Well, right now, the stock's trading at 1250, right? So your break even pulls back to 1218. You're putting up 118 to make 82. 70% max return on risk, probability of profit around 56. If this stock can get back to 13, you're looking at about a 20% gain. Pull it then. You don't have to go through the full duration of November. If you want to focus on a more short-term move, you could look at the November 7th. But again, there's a 20-cent leak on a lot of this, and I don't want to be caught in a situation where I'm spending too much on slippage. There's 10 cents right now on the 1113, and that's 63. That's the 13 is currently was at 63. It closed yesterday, 2-cent spread. So you're seeing a pretty good situation there. You could also buy the 12 and sell the 14. Your probability of profit's going to change pretty significantly by doing that. But for November 21st, if you bought the 12, sold the 14, 44% probability of profit, 150%, forgive me, 150% max return on risk, and your break even at expiry is 1281. All right, and then you got BGC. This is Cantor Fitzgerald's arm here, which, again, a lot of people, you see these names, particularly around, this was an insider buying move recently. So BGC, again, coming back above this core level. It's not a very liquid option chain, unfortunately, particularly out to November. I just like buying the stock, right? And just looking for a continued move here. There was significant insider buying on this stock a couple of days ago. BGC, it was the chairman of the board the managing partner, Cantor Fitzgerald LP, bought $82 million of the stock. So it's one of the largest insider buys at the current moment. So once again, we're just focusing on what is at scale, $257 million in purchasing the number one stock on insider buying in the last week and a half. 920 was the purchase price on all of this. So once again, you're just trading right alongside the insiders and looking to hopefully get back above that 50-day moving average. You've seen some pretty solid momentum moves on this stock recently, a couple of bucks, maybe $1 or $2. Just again, follow the momentum and set a tight stop back at that 8-day moving average. To the downside, AMR. I haven't seen this name in a while, to be very honest with you. AMR currently breaking down a little bit. And what is the issue here? Well, this alpha metallurgical, I don't necessarily know if I'm going to continue to try to pile on with this. I actually like it as a potential bounce back over the long term. This has that same feel, right? Coking coal. This has that same feel to the palladium share stocks, where if you take a deep step back, you can see the stuff that is not nailed down is in play. So right now, from the short term, we got this tap right off this 50-day EMA. I'm probably going to stay long here and look for an opportunity for a continued reversal and a continued rebound in coking coal. I just don't see how this stuff does not do well in a non-QT environment. So again, right administration, we will, and again, once you keep in mind what China is doing right now, it may not extend just to rare earth materials if China decides that, hey, we're going to stop sharing steel internationally. Entirely possible. That would do pretty well. TTD. The trade desk. What do you do? Ugh. Advertising agencies. You need to be down at around 50 bucks. 50 bucks will take you to 45. That's my analysis. And I'm sticking with it. EVGO. And let me check the room real quick. I've gone dark. Did I freeze? No, you've got charts on. All right, making sure. All right. Leather helmet. Why are we even wearing helmets? We don't need helmets. Rugby players don't wear helmets. It's happening. Come on. Just chew some Bazooka Joe gum. That too. The old school stuff. The stuff that it's like tree bark. What's the joke? It's like chewing into a mountain. EVGO, Evo Go. This is just holding on here. I can't make a decision on this. I apologize. I'd actually look forward to go back to 5. SkyWest is one of the all-time greats. A couple of years ago, remember, we talked about the idea of using high F score, high Z score. See, thank you. I appreciate it, Don. We'll get there. Every day is just one step forward, and then the next day is 37 back. And we just keep advancing like that until we get back to candlelight and abacus. Candlelight and abacus. All right, remember, I've talked about the idea of high F score, high Z score, low gram number, right? And specifically focusing on these types of names when liquidity has tightened. And that's what happened back here in 2022. My top pick of the year for 2023 was SkyWest. It was at $17. It went to $117 because we just simply looked at F score and Z score. When it comes to this stock, when it comes to assessing this name, it's pretty simple. It's the same rules over and over and over and over and over again, right? Very strong F score, very low gram, pushing back on its 8 and its 20. And now what do? You buy the stock, your stop's at $100. You're looking for a move, hopefully back to 110, right? So that's it. Just buying the stock. That's all I'm trying to do. Just buying the stock. Don't have to just trade options all the time. There is plenty of action and plenty of liquidity in these high F score, low gram numbers. If you want to look for options, if you want to make that trade, if you want to go longer term, you can, but you're going to need to set a stop, and you probably want to have a higher delta. The 95 for November isn't terrible, but you're going to need to get that somewhere around 10, 1050, 1040 to really, maximize every dollar that you possibly can. So we're just looking for a continuation. Maybe we get some new momentum. We've seen some nice moves based on that 820 move, $10 to $20 moves. Let's play it again. Roll the dice. Industrials, airlines are doing well. AAL is on that list. And SkyWest is a regional player in operating the puddle jumpers for a handful of these airlines that are just doing rock solid today. So their success is bullish for the broader sector. All right. What do we got? Oh, that's one way to put it. Jeez. All right. People are asking about RXRX. Had a huge day yesterday. Once again, same rules apply. Crossover on that 850 and big move back up. We tapped about $7 yesterday. No, we didn't. Where did we hit? We got to 681. So key thing here, again, just following the same momentum rules around this name over and over again. And what's interesting about RXRX's move in the last couple of days is that it has come at the expense of NVIDIA, which obviously has been under some pressure from yesterday, clawing back yesterday, but really was that 20-day, or forgive me, that 50-day simple moving average tap that should have given some people a little bit of alarm. Let's do a real quick assessment. S&P 500 technicals, looking at stocks that are up on the week, or forgive me, up on the month and up 5% on the week. And just looking to see where capital has been flowing in on the ends of the bell curve. Up on the month, 18. Okay, so what do we got? Newmont, obviously, still very strong. Warner Brothers has been bouncing back. WPD had been chopping around. Prologis, Dollar General, which we discussed as well, Constellation, Caterpillar, Bunge, and Bank of America. So Ross Stores, it's a lot of cyclicals. There's industrials. What you're not seeing there, and this is very important, technology. You're not seeing tech names on this list because technology has been negative, finally turning positive in recent days. But let me look at the measurement here. We're still negative on tech. We're still negative on tech. We are positive in the very sectors that you're seeing right now. Consumer defensive has improved. Healthcare has improved. Utilities have improved. Industrials are now positive as well. On the other side of this, what is weakening? Oh, I didn't add the beta coefficient. I need to do that. 11. Amazon. Wow. All right. AXN, Baker, F5, Hewlett Packard, Keep Corp, Mosaic. Mosaic's been under a lot of stress recently, which is unusual, right? Because we would anticipate that agricultural inputs would be necessary. But IPI under pressure, Mosaic under pressure, Targa Resources. And once again, this all goes back to what's been beaten up. Technology has been beaten up. Financials, they're improving, but we're going to continue to be heavily focused on these regional banks over the next couple of weeks, particularly as the Fed tries to make some sort of statements to help provide some support to the broader sector itself. Overall, then you still have weakness in the communication services and the consumer cyclical side. Pay very close attention to the WANT, which is WANT, the leveraged ETF around cyclicals. Man, big drop the other day, trying to get back above the 8 and the 50, see if we can push that 20. But I mean, this is a very tricky environment right now. VIX down 1%, cocoa, palladium, all the metals, all the lumber, everything that comes with it, all the stuff that you want to put your hands in the dirt. There's nothing financialized in all of this, except for obviously the Nikkei. But, this is still that environment where rare earths, hard metals, physical wealth continues to do very well. And we're going to start to pay very close attention to the seasonality of natural gas and heating oil and things along those lines very soon as well. Finally, just to take a look in the chat. Yep, very bad on Mosaic right now. RXRX, he's looking to roll back up, exercised his cost basis at 445. Great win there. And what else do we have? 1 foot forward, other back. Yeah, it's a story of my life. I get to go outside right now and work on a hole in the fence, so that'll be good. And then the dog's just going to dig another one. This is what happens when you mix a pit bull with a basset hound. The pit bull wants to attack everything on the other side of the fence, and the basset hound just wants to dig under it. Quite a mix on that front. Crypto, one last thing. Bitcoin 145. Ethereum continuing to move higher. We'll talk a little bit about Bitcoin today in the last half hour. I will be back at 3:30. I want to focus on crypto today, largely because this is the liquidity play. And if we start to see any level of expansion, any level of focusing on less quantitative tightening, ultimately the end goal here will be, at what point does the Fed actually have to engage in QT? And I know it sounds, QE. I know it sounds crazy. The idea that the Federal Reserve may very well need to print into a elevated inflationary environment. But the reality is, when the stress is in the SOFR and the stress is in the repo markets, they don't have a choice. And if you recall, they did it. It wasn't the Fed. It was the Bank of England that did it during the gilt crisis in 2022. So in the event that you hear anything, this is my last statement before we hand it all over to Don. Okay? I'm going to stress this one more time. They might not call it quantitative easing. They might come up with a new term. They might call it the bank overnight lending special rate. They might just make it out of thin air. The end goal of all of this is financial stability. It's not about inflation and it's not about jobs. It's about financial stability in the overnight markets and the money that is lent between the banks for whom the Fed works. They don't work for you. They don't work for me. They work for the financial institutions. So providing that stability is the actual mandate, the actual goal. And you can go back through time, every single time that you go back to the 1970s and you see action by the Fed, it has been at the expense of inflation. It has been effectively to continue to print. So they might not call it QE. They probably won't call it QE. But the end goal, the only thing that matters is that whatever the program is, whatever the tool is, whatever they are trying to achieve, it has the same outcome of what QE did in the past. That is the message. So when you hear they are opening a new lending facility, when you hear that they are shifting to a focus on stabilizing the SOFR, which is actually being argued right now, keep this in mind. There is going to be more monetary inflation, more expansion, more money printing, and higher prices. And as a result, keep in mind we're at $338 trillion in global debt. By 2035, that number, I assure you, will be about $650 trillion. Everybody have a great day. Talk to you soon.